I must admit I'm guilty of many things. One of the things I'm guilty of from a market reporting point of view is ignoring the JSE listed property sector. But let's start to put that right now, because Arrowhead has come out with some news, and I find it a very interesting story actually, because Arrowhead is the only JSE listed company which property company that gives us the luxury of quarterly distributions, but also only listed in December 2011, and yet the news out this morning, I'll just read it to you now if I may. It's set to increase its market cap by more than 150%, and that's on the back of a strong acquisition drive. Since listing in December, as I said, the company has acquired an aggregate portfolio of 16 properties with a combined market value of over 820 million rand. Let's talk about this deal now and this acquisition drive with the Chief Operating Officer who's in the Power Lunch Johannesburg studio. It's Mark Kaplan. Mark, was this planned when you first decided to go to the JSE with a listing, or has this come about since your listing?
These acquisitions have come about since the listing. We had a broad plan to increase our market cap to our portfolio size to 10 billion in 5 years. So we definitely were set to try and increase our market cap or our size of our portfolio through acquisitions, but we had none of these acquisitions had actually been implemented or planned or negotiated prior to listing. So these are all new properties that have been negotiated since our listing in December.
Very good. And obviously the question here from a listing point of view is, has your listing on the JSE helped? In other words, it has raised your profile and it has made these acquisitions possible from a funding point of view.
Yes, we had a slightly different start to many of the other listed property companies as we unbundled from Redefine, which has worked out very well as we inherited the whole shareholder base of Redefine, which has given our share as a newly listed property company quite good liquidity in comparison to some of the other newer listings. And this has really worked in our favor, and there seems to be a good appetite for Arrowhead stock in the markets.
Yes, I would imagine so, and I would imagine there's also going to be even more appetite. Now, I don't know how it quite works, but I would imagine that the fact that your market cap has gone up because of these 16 acquisitions, which we'll come to in a moment, there are certain funds that were precluded from investing in your stock because of your market cap, but now it's gone up there, they can actually become involved. Is that the case?
I'm not sure what the exact level is, but I think it's between 2 and 2.5 billion that there are quite a lot of funds that are, like you mentioned, precluded from investing in stocks just on the sole factor their market cap not being of the right size. So obviously that was one of our reasons to try and increase our portfolio, was to make our stock available to a wider market.
Okay, now let's have a look at the properties themselves. What's the mix? Commercial, industrial, retail? What can you tell us something about this new portfolio?
So I mean, just to give you a little bit of a glimpse into what Arrowhead's strategy is, we really look at buying first step in our strategy into acquiring new properties to make sure that it's revenue enhancing. Really, we look at what we're trading at on the stock market, let's say combined because we've got two shares, our A share and our B share, trading at roughly a forward yield of around 9%. We're looking to buy properties at around 11%, and that makes them revenue enhancing, and that's really our first box that we need to tick. After that, we look at buying properties that have sustainable revenue streams, and we look at where they are, the types of tenants, and those are the factors that we take into account. All these properties fit that criteria. We've got quite a nice spread in terms of there being retail, office and industrial. The bulk of the properties are retail, and we don't have any specific focus when it comes to sector or area. We just look at it being revenue enhancing and sustainable revenue streams.
So you don't say to yourself, for example, well, the interest rate cycle in South Africa is doing this, the macroeconomics worldwide is doing that, and therefore that's going to filter down to South Africa eventually, and therefore we've got to have retail, office or industrial. You just look at the yield and you go in there if the price is right.
That's right. For us, it must be revenue enhancing. Our goal is to grow income per unit, and that's our sole focus. And in doing that, we look to manage the risk. One of the ways we can manage the risk is by increasing the size of the portfolio so that the risk associated with any one property is not that large. And as the portfolio grows, that becomes smaller and smaller. And that's something, the risk factor that we take into account when acquiring properties.
How did you fund the properties themselves? I mean, it's just an increased issuance.
Yes, so effectively we listed with 84 million A and B units each in issue, and this will take us up to give or take 172 million shares once all the transactions have been implemented.
What was the reaction of shareholders when this issuance took place, Mark? Was it generally favourable?
We were very happy. I mean, some of the sellers have actually taken Arrowhead paper, I think, which is very positive in terms of they've obviously spoken to their various advisors who have advised that Arrowhead's fairly liquid, well, nicely liquid in terms of they'd be able to dispose of their stock should they wish to do that, as well as them being able to hold on to Arrowhead for the longer term because they believe in the story, and I think that's what you're seeing with our main shareholders and the broader Arrowhead shareholders that we've said we're going to stick to a strategy of growing income per unit by buying revenue enhancing properties and increasing the size of our portfolio to minimize the risk. And I think the fact that these transactions support that strategy, it's being favorably received by the markets.
Let me just read again from the press release which you kindly sent me this morning. It says Arrowhead has recently obtained Competition Commission approval to acquire a portfolio consisting of 8 commercial buildings from Growth Point Properties for 167.6 million. The ones from Growth Point, why are they disposing of those? Why are you buying them? Is it just because it's non-core to Growth Point's business, too small in their portfolio? What's the reason for them selling?
I think that really, I mean, I can't speak for Growth Point, but from what I understand, I think you've hit the nail on the head, that really these properties are very small for Growth Point and they are non-core. Some of them are, for example, a sectional title or office park within a larger office park, which doesn't make sense for a Growth Point to hold. I think the biggest single asset is valued at roughly around 45 million. So, I mean, you're really looking at very small properties, management-intensive properties that probably wouldn't make sense for a Growth Point to hold. And Arrowhead was able to pick them up at a fair price that works and fits in line with Arrowhead's strategy.
You sound very ambitious, Mark. I mean, this deal is obviously indicative of that. Are you going to continue to be on the acquisition trail, or do opportunities like this not come up that much because there's so much opportunity for high-yielding deals like this one?
I think we're finding ourselves in a very favourable spot in the market, and that we are able to look at the higher yielding properties with not that much competition. Competition from, let's say, individuals is minimal due to the fact that we often buy stuff with shorter term leases, which banks won't fund. So individuals are required to get larger amounts of equity these days because of banks taking less risk, as well as the fact that banks often won't lend on short-term leases to individuals. And one's also finding in the listed property sector that most of the listed property sector is looking at properties with net yields of below 10.5%. We have very few competitors looking at similar stock. So we are able to pick up this type of stock at very good prices, and one's finding that there's a large pipeline out there.
Mark, thanks so much for your time this morning. It's an interesting deal. I shall keep an eye on Arrowhead stock over the next few days and weeks, but it certainly sounds as though that you're nimble enough to take advantage of the sort of deals that we've just been reporting on. That's Mark Kaplan, who's the Chief Operating Officer of Arrowhead, the JSE listed Arrowhead.